Hey guys, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. And what better way to start this video than to show you this bloodbath? And this is just the one day from last Friday. You zoom out and take a look at the week. Alright, not so bad. Still pretty red, not so bad. The past month, red again. Back to a whole bunch of red, but you do get some green in consumer defensives and tobacco. But other than that, you're pretty much red. The past 6 months, okay, it gets better. You get a lot more green in energy and some other names in healthcare. Again, consumer defensives, Berkshire. But look at Amazon, almost down 30%. Google, 20%. Tesla's been super volatile, down 20%. Microsoft, down 15%. And really the only one holding up is maybe Apple at 3.33%. Even Nvidia, down 25.6%. AMD, 30%. To say it's been ugly has been an understatement. You look at the SPY, down 3.69% this past Friday. The past week, alright, 2.72%. This looks similar to actually the week prior, where everything was going pretty good, and then Fed Chairman Jerome Powell spoke at this conference, and then on that Thursday, it just went straight down after that. Here, we're down 4%. Over the past month, down 9% on the S&P 500. Looking at the NASDAQ, it gets much, much uglier because tech has been getting routed. Down 4.5% on Friday. In the past 5 days, not as bad, but down 3.23%. And over the past month, down 13.43% on the NASDAQ, and posting the worst month since 2008 during that recession. This is a chart of the forward PE ratio of the S&P 500, so we've definitely contracted from the highs we were back in the last couple of years. Right in that area that we had resistance back in 2020, 2017, and all the way back in 2003, 2004. But we still are pretty high despite the average over the past 10 years. We've been around maybe, let's say, 14, 15, 16. So can we continue contracting? Absolutely. But is this an area of interest? Absolutely. And this chart, like many others, can be found on my Instagram that you can find down below in my description, as well as my TikTok and my Twitter. As well, if you're new to the channel, welcome aboard. Hit that subscribe button, and as always, smash that like button. And this week, again, full of earnings. Last week was the huge week when you had big names like Apple, Microsoft, Google, Amazon. But this week, still some pretty good names. AMD, Airbnb, Starbucks, Skyworks Solutions, Moderna, Shopify, which fell off a cliff, Block, Lucid, Mercado Libre, and DraftKings. The NASDAQ has been plunging to new, fresh lows for 2022. We were thinking maybe it was January 24th. We rallied. Nope. Then we had this kind of double bottom over here, followed by a strong rally. We had a hard rejection at $370 and came right back down and made even newer lows this past Friday. When does the pain end? Not to mention this upcoming week, we have the FOMC meeting, and all eyes this week are going to be focused on Jerome Powell, who's expected to increase another rate hike at 0.5% or 50 basis points. Because the last time he spoke in middle of March, what happened? The market rallied after. Is that what's in store again? Maybe we're reaching max pain right now and then we're going to have another rally. Or maybe we're just getting started. The next level we're going to hit is maybe $300 on the NASDAQ. Really anybody's guess. Also take a look at the dollar index, finding a significant amount of strength. We're pretty detached from the moving averages. When we take a look at the monthly and we zoom out, we see that we are reaching a point of resistance at maybe 103. We reached it back in March of 2020. We reached it in the beginning of 2017. And all the way back in the 1990s. So again, a lot of strength in the dollar. Really the only thing that's safe these days, other than kind of energy over the past 6 months, has been the dollar. Which is ironic considering the inflation that we're seeing around us, but really where else do you put your money? Equities are falling pretty much across the board, especially with bond yields still pretty low and they've just been selling off. We take a look at the 2-year yield. It looks like we're calming down a little bit. The slope isn't as intense, at least compared to the beginning of the year. So currently at 2.72%, the 10-year at 2.88. And zooming out on the monthly, we were saying that 3% area is a potential area of resistance when it comes to the 10-year yield. So far from the first time we hit 3%, we have pulled back. We're testing it now. This could be a very interesting point looking into this week, especially with the FOMC meeting and where stocks are where they are. It's going to be interesting. Bitcoin looking weak, looking like we've broken that uptrend ever since beginning of the year, oh man, unless we can quickly reclaim it, similar to kind of how we broke through this resistance and we thought, okay, maybe Bitcoin's going to break out, and then it came right back into our channel. Maybe we can do that again. If not, it's not looking good. Next area is going to be 37,000. Right now we're at 38,000. We break 37,000, what's going to be next? Looking like maybe 35, 34,000, and then even lower than that, you're looking at 30, 32,000, and then that 30,000 point, and then below that, oh, it could get really, really ugly. But right now, we're still at 38,000. Let's see what happens in the short term. Ethereum, same old story. What happens to one will happen to the other. Crypto is weak right now. Risk on is weak right now. Crypto is really following the stock market, which is down as of these days. Even gold, silver, not looking that great. Gold below the 50 EMA on the weekly. And silver also looking incredibly weak. Again, nowhere really to hide, just cash. Oil, after that euphoric run, we pulled back, and ever since we've just been chopping sideways. I think everyone is just confused. Consumers, investors, traders are having it good this year. Volatility is good for trading, but otherwise, no one really knows what's going on. Just waiting to see what the Fed does and how it reacts to what's going on. Speaking of volatility, we've been getting a spike in the VIX. I remember a few weeks ago, Josh Brown was saying when we were low on the VIX below 20, he said sell your stocks below 20 and buy above 30. Be quick, be nimble. So far, that strategy would have been working, but again, we're on that higher limit of where we're expecting the VIX to be. Maybe we go back to 40, but otherwise above 40, I mean, it's possible, why not? But it's hard to sustain fear without getting some kind of rally in the short term. Even if it ends up being a bull trap, the VIX will still go back down. Alright, otherwise that's the end of my video. Thank you very much for watching. As always, let me know in the comments below, what are your thoughts on this bloody, bloody market? The worst month for the NASDAQ in over, 14 years since the 2008 recession. Let me know in the comments below. As always, smash that like button. Check out my description below for my TikTok, my Instagram, and my Twitter, and hit that subscribe button. I will see you guys in the next video.